Deal Surgeons, Elite Masterminds, what's going on? This is Anthony. So now we're back doing top-down analysis on GJ, all right? So this is top-down analysis for the week, getting ready for Sunday at 2 p.m. Pacific Standard Time. Don't mind my hat, it's looking crazy. But yeah, a lot of things are changing for the better. Haven't shot a video in a while, so I'll explain what all these areas are right here. So this is top-down analysis. So I was doing things real complicated on my previous videos, but now it's really simple. Even with all these lines and stuff, it still look kind of confusing. Actually, let me investigate how to predict. Okay, yeah, I wrote some notes to myself, so let me delete some of this stuff because I kind of internally know this stuff. All right, so this is top-down analysis. So I was watching something called Forex and Chill, and the people on there really gave me like a simple way to do top-down analysis, which I think works. So let me share that with you. So basically, we come here on a monthly, and is there any way I can hide this video of me? Jesus, collapse, expand. All right, anyway, so you go to the monthly, and then you find the most recent high and the most recent low. Okay, so let me turn off all of this. So the most recent high, the most recent low. So you could say, you could just do about this candle. I think I'm supposed to do about this candle, but the way I did it was just the most recent high, the most recent low. That's very recent. So this is this point right here, and then the most recent low, pretty much in this little range is this right here. Now, I probably should have put it right here. I think that's how they taught me how to do it in the video, but so you either could put it right here or you could put it right here. But I put mine's here. This is like, to me, the most recent low, without going all the way, because we pushed up to this point, and in this range right here, this is the most recent low. I mean, I could say this point right here, but this is the most recent low wick. And this is the most recent high wick right here. But, I guess to be safe, you could just put it at the top and bottom of this candle if you wanted to. So the hot pink is my monthly lines. That's my monthly lines. So we draw that out into the future. We do array, and that's how we do that. Now, when I zoom out, let me lighten this up. I don't want to see all these lines. I know when I see these lines, that means that it's something I should take a look at. But I don't want to see all of this stuff. So make sure this is locked. So you want to make sure you lock all the drawings as well, so you don't accidentally move them. It's terrible when it happens. This right here, I already lightened it up, but let me darken this up just a little bit. So basically, when price gets up here, I'll know what this is. This is my inefficiency areas, and I'll explain what that is. See, this is a lot of stuff that I learned since last time I shot videos. I've shot videos in maybe 2 months. Your boy been out here grinding every single day and night. About to get that big payoff soon. Now, speaking into existence, I already got it. All right, so this box right here is basically, this is called an inefficiency. So I learned this from Smart Money Concepts. So you see this box right here? This is when price pushed down right here, it made a gap. It made a gap right here. So this is actually an interesting concept. Let me show you. So right here, when price pushed down, right here, this candle here, you see how the wicks are closing the gaps. You see there's no gap right here. Just imagine this candle here. Let's say this wasn't here at all. Let me scratch this out so you can really get this. Because this is eye-opening for me when I first saw it. I actually saw it from a girl who I thought she was like a god or something, and then I found out she just learned it from a guy named ITC, who really is a god in this game. So let's say this was like this, right? It was no wick at all. So, and let's say this was right here. Okay. So if this wick never came down, this created a gap. Does that make sense? So this created a gap. So this would be an inefficiency. And so price would basically have to come in and fill this area at some point. So, but when I delete this here, hold on. Let me put this, let me delete this. But when I delete this here, you see there's no inefficiency because the wicks filled in that gap. So basically this is a they call it inefficiencies or what's the other, imbalances, inefficiencies and imbalances, because you may hear this term passed around. It's very important. I think support and resistance zones is good too. And to draw up these and identify these inefficiency and balance areas is important as well, because what's going to happen is price is basically going to fill that area. And I'm going to show you a scenario of that happening that really made me lose the trade, and I was confused, but now I understand, and I'll explain it when we get down to. I think it happened on a 1 hour chart. So top down analysis. So basically, you find the most recent high and the most recent low, which is to me right here and right here. You could just do about this candle, all right, and you just do a ray into the future. And so down here, I identified another inefficiency area right here. You see that? Basically, when price gapped up, that's why I like to have these candles here with no, like, being empty basically, or just all black. So I really can hit home with this concept. So when it gapped up, when it shot up, it created an inefficiency. Price has to come back to hit this inefficiency zone. So I'm actually expecting price to possibly hit it on Sunday. It probably won't. And I'll explain it when we get down to that area. So that's what those boxes are. So let's go down to actually, let's look at the overall structure. Let's look at the overall structure. So when I take off the drawings, the overall structure is here. Now, I actually kind of identified something on my own that helped me understand the structure. So I basically know how the overall markets move now. Like before, I was clueless. I thought the shit was random. It's not. It basically does the same thing literally every single time. But it does. The only trick is it stretches, and it stretches itself. You know, this is what I've noticed, and I kind of had like a come to Jesus moment on my own on 2/22, which is February 2nd, 2022, which was not too long ago. And so I came up with my own way to explain this to myself. And it may sound kind of silly when I explain this, but this is what helps me out with this. This blue right here I call this Moses. I know you guys are gonna laugh, but I call this Moses parting the Red Sea. Okay, that's why I have this as blue. This is Moses' cane, and this is a sea. And when he departs the Red Sea, it creates a wave. And this is how I came to realize this and understand this. So let me explain. So right here, this is a structure right here that happens all the time, even all the way down to the 1 minute. All right. Now, this moves in threes. So you see you got 3 pushes here. Actually, another thing that I use is called Heikin-Ashi right here, which helps me see the structure better. This kind of helps me out. I mean, you guys can check it out. I mean, I still look at candles because it's important to see candles. But the Hakanashi, am I pronouncing that correctly? Hakanashi. It helps me see the structure better. So what I've been learning and what I've been seeing is that it's three different pushes before it reverses. So if you see right here, these threes right here, let me actually go back to the regular candles. This is how I like to draw the structure. This is how I like to draw it. So can you guys see that? Just put a one in the chat if you guys can see it. All right, so this is how I do it. I'm not saying this is right, but this is the way I do it because you gotta know how to see the structure, especially when you're in the middle of the trades and you gotta make a decision. Actually, I don't think this one is. I think this is right here, but I identified this as ABC. And so another thing I identified is basically the power of three. It's something that ICT talks about as well. The power of three. So basically, you guys will see the same structure over and over again. Like for instance, this structure here is literally right here. Let me show you what the structure is right here. This GJ right here. This is basically the overall structure of the market. So what I did on my phone was I took a screenshot and I try to identify the patterns for where I want to enter the market. So this pattern right here is literally this right here. Literally. And so what I'll do is I'll match it up. I'm kind of going off on a tangent, but I just want to show you like a discovery I made, which, really made things easier for me. So you see this right here, the ABC, these are the low points of the market before the drop. You see that ABC? Those are the lows right here. You see how it was ABC, then price pushed up before the drop? That's what I'm saying. You got to understand the structure because it's not always going to look the same, but it's the same structure. That's how they confuse people out here. It's the same structure, literally, but it stretches itself. The candles are a little bigger, or the wicks are a lot longer, but the wicks can actually throw you off. So I mean, they can throw you off, and they give you clues as well. So, and I'll explain all of that. But this basically what I'm trying to break down is that we're in the same structure here. ABC, okay, which is the lows. This is a low. Literally, it literally did the same thing. Look at this: 2 wicks down at the beginning of the trend of the trend line. 2 wicks down right here. You see that? Boom. Let me come over here. I thought it did 2 wicks down. That's 2 wicks right there. Okay, so that's A. That's A. That's B. The second touch was B. You see that? This is actually like real sauce right here. I should be charging for this. But so this is C right here. And this is C, right? What happened at the C? It pushed off. It literally did the Superman. Like, this is how I wish they let us put like, if you guys got any questions, just put it in the chat right there. But this is literally like the liftoff right here. You see that? So it's the same structure, man. That's what I'm trying to tell you. This is revolutionary what I discovered on my own. It's the same structure. So you see right here, it did the Superman. It lifted off. What I mean by Superman is that it literally lifted off this line right here before the drop. And this is the Moses cane, and I'll explain that as well. But this is basically, it did this. After the C, it's going to do the Superman. So when I'm down on the 5-minute time frame, 15-minute time frame, and I see something like this, where basically it does the Moses, this is Moses parting the Red Sea. Like I said, when you can come up with your own, the way you see it yourself. But for me, this what helps me out. When it parts the Red Sea, if I imagine Moses sticking his cane in the ocean, and what happens? It creates like a ripple. It creates like a ripple. So actually, this structure isn't even done yet. This is part of the overall down move right here. So when it comes down, it creates some waves. You see that? And now it comes up here, And then I imagine this at the C, Superman coming up. And then this is Moses again, parting the Red Sea. And then you got a wave. That's how I know the market. That's how I know GJ is going up. That's how I know it's going up. And I'll explain all of that. Because of the structure. Okay. Also, another thing that I noticed is that this is just structure right here. If you guys go back test this, it's some powerful shit, man. You see these green points right here? This is what ITC showed me in his trainings. Like, this is some powerful shit because right now I know if I go to a different pair and I see a impulse, right? This is what this is, because the market just basically consists of impulse, correction, continuation. So if I see an impulse down right here, if I see this and then I see the next candle close bullish, I'm in. And so what you'll notice is that when you see these wick peaks down right here, I call these like seahorse peaks, or you can imagine like a swan. The peaks of this swan right here, like I said, this is the way I interpret it to help me understand it. But when you see an impulse down like this and the next candle is white, I'm in for the buy. And here's the deal. This is like the signature move right here. You can guarantee that it's going to come up to this wick right here. Guaranteed. I don't know when. It may not come exactly, because look right here. And this is sometimes you get a fake out when you're not as patient, because that's where I've been messing up at. Sometimes I would do a buy to the wick right here because I know it's coming up. It has to feel that imbalance because the market created an imbalance. Does that make sense? Right here, from the wick to the here is an imbalance. It has to come up to feel that at some point. Now, if I'm down on the 15-minute or the 5-minute, it's going to feel it, quicker than if I did it on a 4-hour, if that makes sense. So sometimes what it'll do is it'll come like halfway. Actually, let's measure this. Let's measure this to see how, let's measure this whole move right here from the top to the bottom. See, everything in this game is mathematical. You see, so this is 50%. So yeah, it'll usually come up to about 50% and then drop down, and then it'll definitely come back up here, because when it came back up here, it did what? It came up to this wick. It filled it, man. I'm telling you, this is the guaranteed move. This is what I'm looking for all next week. That's why I have to pick a few more pairs, because on GJ, I mean, sometimes it don't happen all the time. But this move right here is guaranteed. Like, if we go to Bitcoin right now, I've been bragging about Bitcoin to somebody who kind of met me when I first got started. And I told him where the market is going based on this signature move where it has to fill the gap. And that's another thing I noticed. All these markets, every Bitcoin, US 30, all of them move the same. It's the same shit, man. It's the same thing. Like, you just got to see the structure and know where it's going. That's what I've been training my eyes to see, the structure. Because when you down on the lower time frames, the structure can stretch. It can get smaller, the wicks, like it'll kind of confuse you, but you gotta know how to see it. And I'm not saying I'm an expert, but I'm saying that I know a lot more than the last video I shot. And that's why I like using Heikin-Ashi candles, because it shows you the structure. It kind of weeds out all of the noise. Now remember, I said this is the same structure here that's right here. That basically the same move. And so what I mean is, so here's the drop, right? Here's the drop. This right here is this right here. Look at this. It's the same. It's literally the same shit. The green candle here is the green candle here. I mean, 80% of the time you'll see it, because sometimes it'll throw you off if you look at it wrong. This right here is this right here. If you got any questions, put it right there in the chat. Now this right here is this right here. You see that? Now this will throw you off sometimes. These four or five candles right here in a row. This literally is just this one right here. And see, this is why you got to read the structure. And this right here is this right here. And then we have another red. This is the red right there. Then we have a whole green right here. So that's what I'm saying. The structure will stretch sometimes. You see this, and then it comes down to this. This is this. Even though it don't look the same, it's the same structure. It's just stretched, or it's minimum, or it's you know squished up together. It's the same structure though. So this right here is this. This is this. This is that. You see? So that's kind of what I've been noticing. Even in the uptrend, it's the same structure. It's just stretched up. Like the shit is kind of crazy, you know. But in an uptrend, you shouldn't be trying to depend on this structure. But what I've been, because you just have to wait until it breaks that trend line. But in consolidation, oh yeah, in consolidation, that's what I've been waiting on this week as well. This structure will form, and I'll be able to see it a lot more clearly. All right, let me see what questions we got in the chat. Yeah, I've been studying since Susan asks how long you been studying. I've been studying since I think August last year, every single day, every single day. Um, so so let's go down. I'm still on top down analysis, so let's go down to the weekly. All right, so now we're on the weekly. Um, so again, we're going to mark this up from the top to the top. Now, like I said, I think the way Gigi explained this on Forex and Chill, I think she explained this a different way. I think she said mark up the most recent low. Like I think she was saying put it here and then you will put it here. I think that's the way I'm supposed to do it. But so you could do it either way. I just put the blue as my weekly. So I put the weekly. I put it right here. And then the second most recent high, because this is the recent high. The second most recent high is this one, so I put it right there. And again, these green candles, I'll explain what all this is. Remember, that's inefficiencies. So this is letting me know that these are just points. These are just areas of interest. Actually, let me take off this background right here because this is confusing people, and it's confusing myself a little bit too. So let's take this off. It's just a little grid on the background. It's actually good to have, but it's kind of confusing me with all my stuff that I got on here. All right, it looks better. So I have a line. This is my weekly. Yeah, so this is a weekly ghost pattern I have on here. I may have to delete it, but let's see if it's accurate. Yeah, so basically this is a ghost pattern I put on here. You can I learned this from Jessica Lane. Basically, you could just find the same pattern because it does literally the same thing. I used to hear people say this all the time, but I didn't understand what they meant until now. Like I see it. I thought the market was random. I'm telling you, it's not random, man. It's doing the same goddamn pattern every single time. It stretches itself and it shrinks itself to confuse people, I suppose, or whatever. But you just got to know how to see it. So the ghost pattern, you can find it and project out where the market is going. It's just a indication tool that I learned. All right, so here's the weekly. Like I said, you come here, you mark up however you want to do it. You could do it you could do it from here to here, right? That could be the most recent high, most recent low. That's literally what it is. Or you could put it right here. But I tried to do it like that, and then I saw that the lines was like on top of each other because the recent low for the weekly and the monthly is like the same line. So I think the way I market it up is the correct way. So I'll leave this on here, this ghost pattern. For the weekly, I have it in blue. And let me just make it so I can barely see it, but barely see it. So when I do see it, I'm like, okay, well, let me brighten this up like I just did. So you could do that if you want to. Um, here's an inefficiency right here on the weekly. Just a point of interest, knowing that the market could come up here. And I'll explain the move that kind of beat me down this week, and show you how it comes to those inefficiency zones. Hold on. Now this right here is my prediction for the whole for the actually this is my prediction for GJ all the way out to the year 2027, I believe it was. Let me redo this one. Hold on. Since I know the structure, I just did like a prediction for the future on what this market is going to do based on a monthly chart. All right, so yeah, so let's go down to the daily. Now the daily is actually really important as well. I learned this from ICT as well, some back tests and stuff I'll be doing over the weekend. Just some things he's been teaching about liquidity. So let me explain that real quick in the best way I know how. Okay, so basically what ICT, what he teaches is that like right now, since it's been trending down, I caught some of these moves this week. I actually took a lot of losses this week because I changed different brokers, and I've been, even though I know the pattern, I know the structure is still difficult to predict it sometimes. So I'm still learning, but I do know some things more now than I did before. So basically, since this is Friday, today's Friday, on right here, we have liquidity down here. So basically, when a market opens on Sunday, it's going to shoot down here. It's going to try to come down here and get the liquidity under here because they have like stop losses and stuff like that under here, from what I understand. So here's a liquidity zone right here. So it kind of makes sense. So price may come down on Sunday and shoot through here and get this and feel this inefficiency. I don't see why it wouldn't. It's so close, but it may not. So it's going to feel this inefficiency, and then it may actually come down here and poke this one as well. Because what I've been learning is that it won't hit the whole inefficiency. This red area to this area here, it'll come through and tap it about 1 or 2 or 3 times before it actually comes in. And then when it comes in, it only hit about 50% before it goes back up. So I've just been studying this. But these are better and stronger than support and resistance zones, even though support and resistance zones are still important, I think. But some people just use these liquidity zones, these inefficiencies, imbalances. All right, so, but yeah, so that's what ICT teaches, to target this. This is a move that he teaches. Now, another thing that I learned as well, check this out. Hope you taking notes. Price will give you 50% of the previous candle. So let's say if it's a big candle, now this one right here is a big candle. So if we pull out the Fibonacci here, it will give, if price is going to continue to go down, it's going to give me 50%. So if I know the trend is down, if I think it's going to go down for, another day or two, I will literally put my, it may not happen on the first candle. It may not happen on Monday, on that Sunday, but Tuesday or Wednesday, if I put a sell limit right here, if I think the market is going down for the overall week, I literally have a sell limit sitting right here, because I know if it's a big candle, and I back tested this as well, price will come back to at least 50% and come back to the 50% area. I've actually tested this, but since this is a daily, since we're on a daily, it may not do it on Sunday. It may do it like Monday, Tuesday, or Wednesday, but it will come back to 50%. if it's continued to go down. And so that's a little something I learned as well. So this is helping me out with entries, which is something I'm working on now, because you got to know where to get in. Because here's another thing: the last videos and all the other videos I shot, I was with a broker where I only had 50 to 1 leverage. So now I have one where it's 500 to 1 leverage, and another one I'm looking at with 1,000 to 1. So you can't be playing around, because I was in a lot of drawdown with the broker that was 50 to 1 leverage. I was in a lot of drawdown, and the account never blew at all. It never blew, and it's because of the low leverage. But now, I'm with the broker with a higher leverage, 50, 500 to 1. And, you got to have your entry spot on. And there's no room for error. That's why this is so important, to know these things. So let me delete this. All right. So when I first did this process right here, this really like freed me up. I'm glad I watched Forex and Chill, and I'm actually been watching a lot of their videos and learning a lot from their teachings, because they bring on like some of the top speakers. And so I'll be watching a lot more of this stuff over this weekend as well. Learning time. So we're on the daily. So I have the red right here is my daily, is the red. This is the most recent high. It's right here. But of course, this is the weekly took that spot. So the next spot up is right here. That's why I have the red right there. And then right here, this is the most recent low above the weekly. Okay. Now, this is another thing that I learned from them, which is really important. Then on the daily here, you draw your line. You draw a trend line from the wicks, the top of the wicks, whether it's at the bottom or the top, right? And that'll tell you everything you need to know for the direction. Now check this out. This is pretty powerful to notice. Let me show you something. Let me see. I can't take my drawings off because I need them to know what I'm doing for next week. But let me show you something. You see how the candle is arcing down like that? Let me show you the trend line again. See, the price is actually off of the trend line going down. This is a strong ass downtrend. When you see this happening, it's strong as hell. The price is not riding the trend line. It literally jumped off the trend line. Now it's going down. It's doing that hawk. I call this the hawk right here. You know how the hawk is in the sky and it just goes down to get the prey. So when you see price lifting off of a trend line, because if you see right here, it hugged it for a while. This is the daily candle. So it hugged it for, days. And then it literally jumped off right here. And it's been, and then it tried to come back to it, and then it jumped down. So this is a strong downtrend. I think on Sunday it's going to definitely hit this inefficiency. And I think it's going to poke this area right here, this red inefficiency, at least 50%. I think it's going to poke at least 50%, because that's what it does. Well, it may not do it. Actually, here's the first. Actually, it may not. It may just poke it. It may not actually penetrate it. Because what I've been noticing, it'll come down and touch it, and then it'll come back up on a candle, and then it'll come down again, and then come down again. And then it'll go to like 50%. It won't hit the whole thing. Especially on the hour chart, it'll hit like 6-7 times before it actually penetrates the whole inefficiency. I literally track this, like a lot of them. So you draw the trend line right here, and then it'll tell you the direction for the whole week. Okay. This is actually powerful. When I first did this, it kind of gave me a lot of clarity. So, let's go down to the next one. Everybody good? If you got any questions, put in the chat. If I don't know the answer, I'll tell you I don't know. I don't know everything. I just, I know some things. All right. So now we're on a 4 hour. Let me zoom out. I thought that was the whole screen. Let me expand the screen. Oh, it's not gonna let me do it because it's recording. Oh Lord. All right, so okay, again, this is the RSI right here. Uh, I've been taking a guy named Ryan Gilpin's teachings, and he trades with RSI 5. So that's why I have this at RSI 5. You know, he finds divergence and other things like that on there, which is pretty good. This is powerful as well. I think I explained in some other videos what divergence is. So now we're on the 4-hour chart. So again, we're going to find the most recent high, most recent low. Hold on. It's not showing me my drawing tools again. May have to refresh this page. Hold on. Okay, I just had to refresh the page. Couldn't see my drawing tools. So all right, so now we're on a, let me go down to the 4-hour chart. Okay, I took these drawings off and they put them back on. Okay. All right, sorry about that. All right, so we're gonna zoom in. And again, so my, like I said, I don't know, you know, if you want to do it, the other way you should do it, I think, is if you should put your 4-hour line right here and your other 4-hour line right here. But I just put it at the most recent high, most recent low, which is literally right above. I don't think this is the right way, but whatever. The most important thing is to draw the trend line on daily to see what you're looking for. So what this means is you should be looking for nothing but sales, especially right now with the war and everything going on in the Ukraine and all of that. And what I've also learned is the news. I thought the news like runs the market. It doesn't. It's just the news basically. If you understand the overall pattern, which I just showed you, and you're gonna have to back test a lot of this stuff for yourself. But the news basically just fulfills the pattern. So what I mean is that's why it's important to just look for sales when you're under when you're. I don't even have to have trend lines on here, even though I do have an indicator on here. I think uh, that shows a trend line, but you don't. I don't really have to have an indicator because when I draw this trend line on the daily, it shows me what the trend is down. You should be looking for nothing but sales because let me show you how. This is how I messed up. Now, in this pattern, with me understanding the overall pattern, this is the Moses to part the Red Sea thing I was talking about. This is just how I see it. So basically, it would come down maybe a little further, and then it would go this way, right? Because this is the overall pattern. I know the overall pattern, but since we're since it's news and everything going on right now, this thing could just keep dropping and keep dropping and keep dropping. It could just keep dropping and keep dropping. You see what I'm saying? Because this is the overall pattern. The overall pattern is for it to drop. Does that make sense? And then when it drops, then it'll start going back up and doing, uh, the waves and everything that I talked about. So that's why it's important because what I'll show you guys in a little bit is I started taking buys because I thought, it would, I was like, okay, well, the pattern is it drops and then it goes back, this way, but it just kept dropping and kept dropping and kept dropping. And I was looking like a fool. Actually, this was right here. Let me show you. It's actually happening right here. This is a big ass drop. I think this happened like Monday. And I was just sitting there like, dude, I was getting mad because I'm like, dude, the pattern is, I was like, the market's supposed to follow the pattern. Like I was getting mad. But then I started learning like, look, this is the pattern. The drop can happen, you know, 20 pips or 2,000 pips. You see what I'm saying? It could drop as long as it want to, and then it'll come back up and start doing the pattern. Was it right there or was it right here? I think it was. Yeah, I think it was right here. I don't think it was this one. I think it was here. And this is when I started learning about the news and how the news, the news doesn't it just helps the market like complete the pattern, overall pattern anyway. But this could just keep dropping forever. As long as it want to, then it can come back and start doing this pattern right here, which is the overall structure. This is how they get to the price. The institutional banks, they don't draw trend lines and do Fibonacci's like we do. They're buying price numbers. See what I'm saying? To the right here, they're buying price. And for them to get to that price, it follows this pattern. It follows this structure to get to that number. Does that make sense? That's what I've been noticing. It has to follow these patterns to get to the overall number that they bought at. They're buying numbers. See what I'm saying? They're trying to get to a certain price. They may say, hey, buy JPY at 151,500. You see? Well, let's say they say buy JPY at 56.5. So since they bought that and they put that money in, another thing that I learned is that hold on, somebody sent a question in. Should you be buying when they're selling? Yeah, that's this is how it works. It's kind of weird. That's what I learned from ITC as well. It's some kind of law that they have where if you see the market tanking like this, going down, basically this is what's happening right now. If you see it selling, then the banks are actually buying. That's how it works. Like they have some kind of law where they have some kind of law by the IMF bank or something like that, where when prices fall in the big banks institutional banks have to be buying, even when it's selling. That's why you see it spike back up, and then when they sell it back to us at a profit to them. It's kind of crazy how it works. So like the banks, they can't sell like while we're selling. When you see it selling like this, the banks have to be buying, and that's what you have something called an order block, which I'll talk a little bit about as well. Kind of went off on a tangent, but okay, so that's the 4-hour chart. So now we're going down to the daily. I'm sorry, the 1 hour. Now, the 1 hour is kind of like the golden child. It's the bread and butter for a lot of people. A lot of people come here and do a lot of drawings. And another thing I learned is that if you're on the 1 hour, whatever time frame you're on, if you're going to take an entry, go two time frames down. I mean, that's like some kind of rule of thumb, but you could go down like right here. We're on the hour chart. If you were to make an entry, you go down to the 15-minute, just two time frames down. And they teach to not go any lower than that. But I mean, you could go down to the 5-minute or the 1 minute, but to make a sniper entry, I see how the entries are sniper now. And I'll explain that a little bit too. I mean, I got all kinds of drawings on here. So I don't draw any lines on here. I don't draw like the most recent high, most recent low, but I guess I could. I just don't want to have all these lines on my chart. But right here, you can see most of the inefficiencies right here. So you can see the daily inefficiency right here, the daily inefficiency. Actually, what I'm going to do is lighten up these lines so I can kind of see my chart a little bit more. So let me lighten these lines up as well. Just a little bit. not so it won't disappear, but so I could kind of barely see it. So I'm just lightening these lines up just a little bit. And then I do it for the bottom as well. Just so you don't, so you can kind of see like where the chart is. You don't have to see all those lines because it get kind of confusing. But you can't delete them because it helps you out. You know. All right, I'm not going to draw the lines here because it's just kind of like too many lines. But basically, right now we're just looking for sales until price breaks above this line. We're looking for nothing but sales. Does that make sense? So even if it comes up, we let it come up. We don't go against the trend because I tried that. I mean, you could do it, but I'm not on that skill level just yet. I'm just looking for nothing but sales because you got to think about it. If you're in a buy right here and you think the structure is going to follow the pattern, it could just keep dropping like for a long ass time. And then come back, and then it'll shoot all the way back up just to complete the pattern. Does that make sense? And then you basically blow your account or whatever. I had to learn that the hard way. You know, I never blew I haven't blew a official account, but I had it like I was trading on demo. And that's the first time I had an account blown, was with the demo leverage. So all right, so yeah, so we're on a 1 hour chart and looking for nothing but sales. And let me see, what was I going to show you? Where's that trade? Oh, the other trade is on my other chart. Now, actually, let me go to my other chart real quick. This is just trading view. Let me go to my Oanda chart. So let me show you that chart. Hold on. Now, what I'm about to reveal now is some next level shit. I haven't seen nobody do this. And I think it really helps. And I'm about to show you guys something. We're going to go down to the hour chart because I already showed you. We already did top down analysis, which I used to hear people say I could do top down analysis in 30 seconds or, 3 minutes or 5 minutes. I'm like, how? I used to take all day on it. But now I see how easy it is, just watch Forex and chill, just watch their videos. All right, so I'm about to pull up my Oanda chart, which really got some sauce on it. So I'm about to show you some shit that's like next level, I think, because I haven't seen nobody else talk about this, but this is just something I kind of discovered. But I'm not even sure if it's accurate. I haven't back tested it enough. Just maybe I probably need to do like maybe I'll show you what I mean. Hold on. I really like Oanda's platform. So let me go down to the 1 hour. Let me show you something real quick. Some next level shit. Hold on. I came up with this shit. Let me show you something. Haven't seen nobody else do this. I just think it helps. Well, it helps me out. Yeah, I got a lot of drawings on here. Let me see if they'll let me go to expansion mode. Okay. All right, so check this out. See, I'm actually in a trade right now with low leverage, and I'm got in at the wrong point. Yeah, I didn't read this one. You see this ghost pattern right here? I had it that it was going up, but yeah, that's a whole nother story. But check this out. Let me zoom out and zoom back in. Oh man, this thing freezing up. Hold on. Yeah, so I'm about to end the video in a little bit. I just want to show you this real quick. All right, so let me zoom in just so I can move my chart a little bit better. Now, let me take off some of these. I got like these EMAs and stuff like that. I think it kind of helps because a few trades that I won this week was based on the 50 and the 200 crossing down, and it was the same. It was a downtrend all the way from the 4 hour to the 1 hour to the 30 minute to the 15 minute, the 5 minute. You know, all of them was crossed down, and it was I just took nothing but sales, and it was like, you know, I was on like a little winning streak. So, but let me show you this. This right here is I've discovered that the overall pattern on a 1 hour chart, it takes about 5 to 6 weeks for it to create a new pattern, the same pattern, but like inside of inside of the one pattern is multiple one patterns. So let me show you what I mean by that. So these separators right here is my lines for my 1 hour chart is the gold right here. So inside of this overall pattern is multiple patterns. See what I'm saying? So if we count, this is week 1, 2, 3, 4, 5. And if you see right here at the week 5, like 5 weeks, that's why I put right here 5 weeks, 3 days, and it reversed on a Tuesday, which is turnaround Tuesdays. Boom. Then it started creating the next pattern, which is the same pattern that was over here, just structured differently. And let me show you what I mean by that. I actually have the patterns right here. See that? Let me show you what I mean. Actually, let me just make these smaller. These are the same patterns. Okay. Hold on. Hold on. I have the other pattern down here somewhere. Where is it? Oh Lord. Don't tell me I deleted it. Now these two right here are the same pattern. I just colored them differently, but I'm looking for the other pattern that I had. Oh Lord, I must have deleted it by accident. Let me just go ahead and do it, just ghost pattern it up again. Hold on. All right, so these two right here, even though they look different, it's the same pattern. It's the same pattern, even though, the looks of it is different. You see what I'm saying? Like it stretches itself, but when you zoom in and actually do these basically are the same pattern. So basically what I learned is that every 5 to 6 weeks on a 1 hour chart, at least for GJ, I got the back tested for other ones. It basically runs the one pattern, which is a correction and an impulse. It does this pattern, which is the same pattern, just stretched out a little bit. It does it every 5 to 6 weeks, and that's what these tan lines are. And so right here, is basically reset. That's probably like a good word for it. So that's why I thought it was going up right here. I thought it was going up, but basically is because of the war and everything. That's why some people don't trade like during the war, like, with the war and everything going on right now. The pattern is going to do this anyway. Sometimes it just stretches down a lot further. Now here's why I messed up at. Let me show you why I messed up at, and then I'll end the call. This is why these inefficiency zones are so important. You see this right here? I have a ghost pattern. I was writing this down, right? I wrote this. Yeah, I wrote this from here. I wrote all this up and made money here. Okay, and then when price came here, I was like, it's going up because this is an impulse, right? So the pattern is, see, that's why I'm saying you still got to know market structure as well, because it's not just going to follow the pattern, especially with news and everything. They can kind of get away with this. And it can hit some of these inefficiency zones faster. Now, let me go all the way over here and show you. This right here, this tan zone is an inefficiency. This was an inefficiency that I marked up, meaning this peak right here, it was a gap. Does that make sense? And you see it tried to come down right here, and then it waited a long time. This is a 60-minute chart. Then it tried to come back down here. It hit it a little bit, and then it came all the way back up. It took all that time, and it was basically building up to come down here, and it shot down like a rocket to hit this inefficiency. It went straight through it. Now I didn't mark this area up, but if I could guess, it's probably inefficiency on a higher time frame. But I didn't mark it up, so I don't know. It's a reason why it came down there. It's not random at all. It's probably inefficiency or something. But I'll have to look it up, and I don't have time to do that on this call. But what I'm saying is, I thought it was going to shoot up right here because this was the pattern. You see, this was the pattern. It would impulse down. It would do this, then it would come down a little bit, and then it would come up. You see, so that's why I have the ghost pattern here for it to come up. And then I got caught with my pants down right here. And I have a small position on here, but it's in drawdown right now because I thought it was going to push up. I know I had got in right here. I thought it was going to push up, and actually this was actually an incorrect entry. I should have known better because based on the pattern, it was going to drop. I don't know what I was thinking right here. Maybe I was drinking or something, because it's definitely going to drop when it gets to this high right here. When it pushed down like that and it started rising back up, this is where you can expect for it to drop again. Now, if it's an uptrend, if it's a strong uptrend, it may not drop as far down at all. It'll come like right here and then build up and then shoot up to complete the pattern. You see what I'm saying? So, yeah, so this is cool. I'm about to end the video here. Yeah, so appreciate you guys watching, and talk to you guys next time. Thanks for watching.